Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings to see if companies are really rocking or just talking. Today we are diving into Panamera Holdings Corporation's latest report. Something that looks like a big shift is happening with their technology and energy deals. Let's get straight into it. Panamera Holdings is making some pretty significant moves. It seems they've locked in an exclusive deal with a company called Rankage Carbon Inc. This deal is for their innovative systems focusing on carbon conversion and clean energy technologies. This agreement is a pretty big deal. It gives Panamera a 30-year exclusive license to actually make use and sell Rankage Carbon's technology and what they call the Eden System technology. This is essentially giving Panamera the keys to some advanced clean energy tools. So what exactly is this technology? Rankage Carbon has patented ways to create clean and efficient power on demand. They say it's helpful for things like powering data centers for AI, which, as you know, use a ton of energy. It also helps with energy independence and fits with government goals about energy and materials. And it's not just about power. The Eden System also creates fancy carbon products like carbon nanotubes and fullerenes. These are used in things like next-gen batteries for better energy storage and also in industries like aerospace, cars and electronics. These materials have unique properties like making sure electricity flows well with high electron mobility, and they are strong and can handle high temperatures. Beyond the technology itself, Panamera is also getting something else out of this deal. They are gaining operations in North Dakota and getting a strategic investment from a major car company. This sounds like it will help Panamera get its own operations up and running smoothly and work with a big respected name in the auto industry. This package deal is a huge boost financially. The report says it adds a massive $100 million to their balance sheet. Now they are positioning themselves to grow across North America. They are targeting a market that could be worth trillions over the next 10 years because of the demand for clean energy and new materials. Now let's talk about the money. This deal involves a principal amount of $49 million that needs to be paid back. It's structured with quarterly payments over 18 months starting October 1, 2025. Originally, they planned to make an initial payment of $5,000 by June 2025 and then pay the rest in June with an extension until July 31, 2025. But the way it's laid out now, the main payments are $65,000 each quarter. There's also a part about restricted shares, which are shares that can't be sold right away. 1/3 of these shares are paid out within 5 business days of signing the agreement, and the rest are paid out over the next 2 to 3 years. There's also a note that they can pay these off faster if they want. Now, for the interesting part about interest, instead of paying cash interest, Panamera will issue more of its restricted stock. The interest rate is tied to a risk-free rate of 49% annually. The number of shares issued depends on the average stock price over 15 days before the payment, but it won't be less than $2 per share. This means they are essentially using their own stock to pay interest, which is a common practice when cash is tight or when companies want to preserve cash. This shareholder payout for interest is a bit of a double-edged sword for current shareholders. It means more shares are being created, diluting ownership, but it also means the company is using its own equity as a form of payment to manage its cash flow. If Panamera has extra money on hand, they can use it to pay off the loan early. This is good for them as it reduces the total interest paid. The loan is secured by 27 million restricted shares of Panamera Holdings. These shares are held in a special account, called them escrow, until the loan is fully paid off. If Panamera fails to pay, Rankage can then sell these shares to get their money back. This is the usual stuff if Panamera defaults. Rankage can just sell those shares to cover what they are owed. The shares also collateralize the performance of the license agreements, meaning if Panamera messes up the license deals, Rankage has leverage. If Panamera misses a payment, they are supposed to talk in good faith to fix it. If they can't sort it out, Rankage can demand the rest of the money owed right away. The agreement will follow the laws of Texas. This is pretty standard for companies based in Texas. Looking ahead, Panamera expects things to really pick up starting in 2026. They are already talking about new deals and supply agreements and are looking for more ways to expand. This sounds like they are setting themselves up for some serious growth in the near future. So who is Panamera Holdings Corporation? They are a US-based company that focuses on metals and clean energy. They use advanced technologies to turn tough environmental and industrial problems into profitable and sustainable solutions. They are building a base for the next generation of energy and materials. Scroll Raincage Carbon Inc. Center Caffin. Raincage Carbon Inc. is a private company all about developing profitable carbon capture and power technology. They have applications in energy, health, and various industries, helping companies reduce their carbon footprint while creating new business opportunities. This entire report is essentially presenting their main license agreement as Exhibit 991, which is basically the star of this filing. And the report is signed off by T. Benjamin Jennings, Chairman, CEO and Director, all on August 7, 2025. This confirms the company is officially endorsing this filing. So what's my take on all this? It seems Panamera Holdings is making a bold move to get into the cutting-edge clean energy and advanced materials market. The deal with Raincage Carbon gives them access to some potentially game-changing technologies, and that $100 million boost to their balance sheet is significant. The use of restricted shares to pay interest is a clever way to manage cash, but it does mean potential dilution for existing shareholders. The 30-year exclusive license is a strong commitment, and the backing of a major automotive producer, along with existing operations in North Dakota, suggest a clear path to scaling up. One of the biggest opportunities here is the potential to tap into a multi-trillion-dollar market for clean energy and advanced materials. If these technologies perform as promised, Panamera could become a major player. However, a key risk is always the execution of these advanced technologies and maintaining the exclusivity rights. If they can't successfully deploy and commercialize the Raincage technology, the entire strategy could falter. The reliance on future revenue growth to cover payments is also something to watch. Overall, Panamera Holdings appears to be charting an aggressive but potentially rewarding course into a high-growth sector. The key will be their ability to deliver on the technological promises and financial projections they've laid out. Alright, that's our breakdown of Panamera Holdings Corporation's latest filing. What's your take on these technologies and what they'll mean for the company's future? Let us know in the comments below. If this analysis was helpful, please hit that like button and subscribe to Corporate Decoder for more deep dives into the world of business, finance, and technology. And don't forget to join our Discord community for more discussions. It's linked in the description below. Thanks for watching. See you next time.